Hi students, Financial Markets and Institution. It is a subject in MCOM third semester. Today I am here to give a summary video of Module 1 of Financial Markets and Institutions. So Module 1, it is an overview of financial markets. In this module, we are going to discuss the financial markets, nature of financial market, functions of financial market and money market, capital market, market for derivatives, working of stock exchange in India, NSE and BSE, role of SEBI, major international stock markets. So these are the topics that we are going to cover under module 1. So let us start with the financial system. So every nation, it will have its own financial system. So a financial system, it may be defined as a set of institutions, instruments and markets which encourage savings and channelize them to their effective use. So we can say that every financial system will consist of financial markets, financial intermediaries and financial instruments. So these financial markets, it will try to encourage savings from the small investors as well as large investors, and they will channelize these savings for their effective use. So every nation, they will try to maintain a stable financial system which facilitates the growth of economy. So let us look into the components of Indian financial system. So Indian financial system, from the diagram, it is clear that there are four major areas of Indian financial system, which comprises of financial institutions, financial markets, financial instruments and financial services. So let us take financial institutions. So you know what do you mean by financial institutions? So financial institutions are those institutions or organizations which deals with finance. So it includes banking institutions as well as non-banking institutions. So banking institutions, it facilitate the development of our economy by regulating the finance or the financial activities within a nation. And these banks are under the control of Reserve Bank of India in our nation. So the main examples of banking institutions are cooperative banks as well as the commercial banks. And non-banking institutions are also there. They are also dealing with finance, but they are not dealing with the banking activities. So these non-banking institutions are of two types, that is organized non-banking institutions as well as unorganized non-banking institutions. So that's about the financial institutions of our nation. And second one, it is financial markets. So you know what do you mean by market? It is a place where buying and selling take place, or it is a situation where buying and selling take place. So financial market, it is a center or it is a situation where financial exchange take place or financial buying and selling take place. So financial markets are of two types, that is money market as well as capital market. So this money market, it is a short-term market, and capital market, it is a long-term market, or it deals with long-term financial instruments. And third one is financial instruments. So financial instruments or financial assets are those items which are traded in financial markets. So these financial instruments again be classified into short-term instruments, medium-term instruments and long-term instruments. And next one is financial services. So financial services can be classified into two types, that is fund-based services are there as well as fees-based services are there. So fund-based services are those services which is related to funds. So the main examples are leasing, hire purchases and factoring. And fees based services are also there, and the examples are merchant banking, credit rate agencies as well as mergers. So these are the components of Indian financial system. So it is a combination of financial institutions, financial markets, financial instruments and financial services. So let us start with the financial market. So we know that it is the major component of financial system. So it is a market or center which facilitates the buying and selling of financial instruments as well as the financial services. And it also deals with the short term as well as the long term financial instruments. So you know that market, it will facilitate the buying and selling. So in the financial market, actually the buying and selling of financial instruments are taking place. So it deals with the short term financial instruments as well as the long term financial instruments. So there arises a question, what do you mean by short term instruments? Short term financial instruments are those instruments which the maturity period will be less than 1 year, and the long term instruments are those financial instruments whose maturity period will be more than 1 year. So these short term as well as long term financial instruments will be dealt in the financial market. So that's about an introduction to financial market. Now let us look into the functions or nature of financial market. So we know that it facilitates borrowing and lending because it is a center or a place where the borrowers as well as the lenders met together. So the person who comes to this market for borrowing can be called as borrowers, and also the person who are coming to this market for investment can be called as lenders. So it is the major function of financial market, that is it facilitates borrowing and lending of the funds. That's the first one, borrowing and lending. And second function is that price determination. So market, there will be demand as well as the supply. So in the financial market also there will be demand as well as the supply of financial assets or instruments. So based on the demand and supply of these financial assets or instruments, the price of these assets are determined. So it is the function of financial market to determine the price of financial assets or instruments. And third one is risk sharing. So we know that borrowers as well as the investors are coming to this market for the sharing of risk. That means borrowers, they need funds, and investors, they have to invest the funds to get a return. So both of these parties are trying to share the risk among them. And next one is liquidity. We know that financial market, it deals with the short term as well as the long term instruments. So when it is dealing with the short term instruments, it is trying to provide maximum liquidity to the financial assets or instruments. And next one is efficiency. So financial market, it is highly efficient because it is trying to reduce the transaction as well as information cost, because when we are doing the transactions in this financial market, the cost can be minimized to a maximum extent when we are comparing with other markets, and also the cost of information will be lower in this financial market. And the next one is information aggregation and coordination. So information is a necessary thing for decision making. So in a financial market, there is information aggregation, and also these financial information are coordinated and kept in a safe manner. So those persons who needs the financial information, they can approach this financial market, and also they can get more vital information for their decision making purposes. So these are the functions or nature of financial market. So once again I repeat, so it includes the borrowing and lending, price determination, risk sharing, liquidity, efficiency, information aggregation, and coordination. So let us discuss the types of financial market. So financial market, as we already said, there are money market, capital market, financial mortgage market, financial guarantee market, and foreign exchange market. So it comprises five different types of market. So first one, it is money market. So money market, it can be called as a short-term market because it deals only with the short-term financial instruments which have a maturity period less than 1 year. So the liquidity will be more higher in the money market, and this money market, it is regulated by Reserve Bank of India in our nation. So that's about the money market. And second one is capital market. So capital market, it is just opposite to money market because it deals with the long term financial instruments. So long term financial instruments are those instruments which have maturity period more than 1 year. So we can say that the liquidity will be very lesser when we are comparing with the money market. So the capital market, it deals with the long-term financial instruments or assets which have a maturity period more than 1 year. And third one is financial mortgage market. So you know what do you mean by mortgage? Mortgage simply means when we are going to have a loan from financial institutions, we have to submit a security for getting loan. So it can be called as mortgage. So financial mortgage market, it is a market where we get loans against immovable property like land, building, etc. So that's about the financial mortgage market. And next one is financial guarantee market. So in the financial guarantee market, we will get loans against the security of a reputed person. So there is reputed person, maybe a government servant. Okay, so we can avail loan without submitting any security, but we can have the assistance of a reputed person to avail loan from this financial guarantee market. And next one is foreign exchange market. So it is a market which deals with the foreign exchange transactions of a nation. So when we are importing as well as the export, and if we are exporting the goods and services, there will be a lot of foreign exchange transactions. So all these foreign exchange transactions will be deal in the foreign exchange market. So these are the different types of financial market that is available in our nation. So we are going to discuss in detail the each type of financial market or each different types of financial market in the coming videos. So we will discuss in detail the money market as well as capital market in this module, and the discussion about the money market will be continued in the next video. Thank you.